The YieldMax MSTR Option Income Strategy ETF, MSTY, is a popular income-generating ETF offering double-digit monthly distributions by selling call options on MicroStrategy MSTR, with yields hovering between 50 and 100% annually. MSTY is attracting high-income investors. But the smart investors know that when and how you buy matters, especially for ETFs with option income strategies and fluctuating NAVs. So let's break down 2 key tactics to potentially buy MSTY at a better price point, which are going to be cash secured puts as well as ex-dividend timing, plus some other strategic insights. So if you think that the MSTY ETF is at a high price point, at $21 per share, and you want it at a cheaper price, what you can do is you can open up a cash secured put. So head over to the options chain if it's not already enabled. Make sure you're on the sell and the put options. Select your expiration date, preferably about a month out. In this case, we have the July 3rd expiration date, which is 22 days or 3 weeks out. And then scroll down to a price point that you would be comfortable holding MSTY shares at. So for example, if you want to buy MSTY at $20 or even less than $20 per share, you can actually select this $20 put option and sell it. And as we can see on the right side, we have a short put, which is going to be a cash secured put, and we're going to receive a total credit of $50. Because remember, each one of these contracts represent 100 shares. So we multiply the credit by 100, which is going to be $50. And basically what this contract is doing is saying that we expect MSTY to stay above $20 per share by expiration July 3rd. And if it does not say MSTY is at $19 per share on July 3rd, we have to buy 100 shares at our strike price, which is $20. But remember, we received a credit of $50 for the contract, so our cost basis is more likely going to be $19.50 per share. You do have to have enough cash collateral in your account to open this trade. So in this case, you need $2,000 of collateral to put down for a cash secured put. So at expiration date, of course, if MSTY is below your strike price, say at $19 or even $18 per share, you are going to be down some money because you do have to buy shares at your strike price. But it's a lot better to own at a cost basis of $20 per share versus if you just bought shares immediately and you had a cost basis of $21.37. Now at expiration, if MSTY is above $20 per share, the contract expires worthless, meaning this contract disappears from your account and you just keep the full $50 in full. And then you can open up another trade for the next following weeks. So if you choose a strike price that is too far below, there is a high chance that you will not get assigned shares. So if you do want share assignment, choose a shorter expiration date and choose a higher strike price. But basically with this strategy, you're getting paid to wait for a better entry. It is very similar to just outright placing a limit buy order and getting paid to place that limit buy order. So say I want to buy MSTY, we're going to place a limit order and a limit price at $20. And share count is going to be $100. Now there is a chance that you will not get filled, and that is going to be the case most likely if you have a very low limit price. But if you're opening up a cash secured put, you actually get paid to place limit buy orders. And that's a great strategy for a lot of people who are accumulating many shares. Now the next strategy to get shares of MSTY at a cheaper price or discount is to actually buy MSTY on or after the ex-dividend date. MSTY's large monthly dividends often lead to price drops on the ex-dividend date as the NAV adjusts downward by roughly the amount of the dividend. So suppose that MSTY pays $1.50 per share dividend. On X date, MSTY's share price often drops by that amount. Many investors buy before the X date to capture the dividend, but that can result in buying high and taking a temporary NAV hit. A smarter approach is actually to buy the dip on or after the ex-dividend date. You skip that month's dividend, but buy shares at a discounted NAV. This allows you to start fresh the following month without riding out that NAV drop. So in turn, you're getting a lower entry price, which is better for long-term yield, and it avoids buying into a short-term top before dividend drop. But the caveats are you don't get the dividend for that month and you have to wait a full month for the next dividend, and the price may rebound quickly, so act fast or set limit orders. We take a look at some of the dividend history for MSTY. Say for example the May 8th date, it paid out a cash amount of about $2.37. So if we take a look at MSTY's chart around the May 8th date, we can see it was at a price point of $25 per share, and then it dropped all the way down to $23.54, accounting for that dividend drop. And that would be a great entry point instead of buying the day before, where you're going to be paying $25 per share. And even though you will get the dividend right before the ex-dividend date, it's not ideal because you do have to pay taxes on all of these dividends because they're actually distributions and they are treated much differently than ordinary dividends because you're going to be paying ordinary income taxes on all these distributions. So a lot of people actually turn on DRIP, which is dividend reinvesting automatically after you receive the dividends. The better strategy for MSTY would actually be manual reinvestment. You want to wait until after the ex-dividend dip and then use the dividends to buy more shares at a lower price, increasing your yield on cost. And another bonus tip is to actually use limit orders with patience. MSTY is a volatile stock due to its tie to MicroStrategy MSTR and its use of options. So you want to utilize limit orders near key technical levels or after red days. Take a look at the past week, it's had a severe drop between June 4th and June 5th, and a lot of people are going to take this as a very good buying opportunity when it drops significantly. And as we can see, if you did buy around this $20 mark, it did recover all the way down up to $21.36. But overall, you want to combine all the tools you have available to you. Sell cash secured puts during the weeks before ex-dividend date to collect premium while waiting for a better entry. And if MSTY drops on ex-dividend date, either let yourself get assigned or buy shares outright at a discount. And you want to reinvest your dividends only after the NAV stabilizes, not blindly at peak prices. Because remember, MSTY is a high yield, high volatility ETF that rewards price sensitive entry. By using option income and dividend aware timing, you turn MSTY into a more tactically acquired cash flow machine, not just a buy and hope asset. So let me know in your comments below what your guys' strategy is to accumulate more and more shares of one of the arguably best YieldMax ETF, as well as one of the best option income strategy ETFs that provides high distribution yields.